Hi, this is Mike, and we're looking at the Euro chart again. So, interesting things have happened since the open this morning, and basically, I've decided to label it as a wave A down, okay, because price never continued to go lower and it broke the previous level impulsively. Therefore, what I think is going on here is the start of a expanded B wave. Okay, so this is purely corrective and there's a good chance that it will psych people out. And this is very interesting because as we head into the next couple of days, we're going to see the FOMC meeting. The Fed will, shock the market as usual. So I think that we're going to see a bit of expansion to the upside and then a smackdown after the fact. So this, to me, it makes logical sense because usually news events they form a top, and because we've already formed a top in the 5 wave move, the way that I can see this expanding to the upside is through the B wave, and that's usually what Elliotticians would call an irregular top. So the irregular top will see the corrective portion expand to the upside, but then you'll see a sharp move down. It's definitely going to be the type of correction that's going to psych people out, and the whole thing could eventually look like a CDE pattern to correct down to the 50 or 60, 50 or 0.618 area of the previous wave 4. So at this stage, I think the head and shoulders pattern is going to fail. I think it's in the process of failing. Um, and you know what they say, failed head and shoulders patterns are bullish, but I think that will be short lived. Um, but it doesn't mean that it won't, um, you know, make a good move up to definitely get people thinking that that's going to happen. And considering that this is the start of a larger trend, there is some bullishness there. It's just that if it's corrective, it's probably going to psych people out and knock people out of their positions. So I suppose in a way I did say that we can trade the corrective portions. So how would we know if this is wrong? So if this is wrong, then we'd have to see a break of this level here, right? Down at about 1.08531, because that would indicate that this basically was a wave B completed, right? Because although it's choppy in the beginning there, uh, it's still roughly like a zigzag pattern. So a break of that low would indicate that this was wrong and the move down will begin. Okay, so because it was a strong move up, it doesn't look like a wave C. Wave C typically would be, I don't know, maybe a bit weaker in nature, but because of the bit of a thrust going on there, it could be the start of a wave 3 for the A wave of the B wave. Okay, so that just means that we're going to have a 5 wave move up, right? It'll break through, retest 5, and that'll be the first portion of the zigzag, right? So it'll make it look pretty bullish at the time because of its impulsive nature, but then chances are it'll come back correct and then make the B wave and then the C wave and then crash back down to a correct, the corrective levels that I've mentioned previously, 50%, 0.618. So, all in all, during this time, it could just do a lot of this and it could happen a lot quicker than what I'm drawing out here, right? But during the FOMC meeting, we might see this type of thing happen, right? Because you know what those can be like. They can be pretty volatile, and this could sort of be drawn out into that event. It may form the pattern during the next couple of days, to to the point where it gets choppy, and then you see the moves sort of happen. Um, for some reason, this just seems like a very possible thing, given past meetings and how they look bullish, they can turn bearish, and given that we are looking for a correction here, this would give it a good reason to look like it's going higher and then go back down. That's something that happens pretty frequently. So aside from that, yeah, like I said, if we break the low down here, then this idea is invalidated, and then I would short it, but I would put my stop above whatever is the last high that this thing makes before it breaks that support level. Okay, because technically speaking, a C wave will have to produce five waves down from the termination of the end of B wave. So it'll form a support once that impulsive wave is broken. But in saying that, it seems a bit too easy, and markets don't really make things easy. I've noticed. I mean, it's pretty obvious. So this is like a backup plan, right? That's why they say good traders, they can turn from bullish to bearish on a dime because they understand the pattern, they understand what it means and what's going on. So those are the scenarios there I've laid out. So you can make your own decision based on the price action that you observe yourself. Because when it comes to purely corrective patterns, it's one video won't explain everything, but at least if I give you the idea of what it is that we're looking at, then that might help depending on your style of trading. So that there is the B wave of the A wave. So for me, that's a 3-wave move, and the choppy nature of it basically didn't indicate to me that we were going to move lower, and I didn't really see this as a 1-2 anymore, given that. Or sorry, I did think potentially it could have been like a 1-2-3-4-5, but this 5-wave move here, it sort of indicated that it's not. So that's why I'm thinking, yeah, it's a zigzag, and we could see a bigger B irregular top. So hopefully you found this video interesting and informative. Thank you for